Today, the crypto world has once again reminded us why it is called the most volatile market on Earth. In just a matter of hours, billions of dollars have been erased from the charts. Headlines are screaming about 125 billion being wiped out, and traders everywhere are scrambling to make sense of the chaos. For some, this is an unprecedented meltdown, but for others who've lived through previous cycles, it's a familiar script being replayed with new figures and stakes. To properly get what's going on in the current moment, we must walk through not just the events of the last few days, but the history of previous crashes that have helped define the crypto universe. The near-term picture is dire. Bitcoin has fallen several percentage points, Ethereum has dropped nearly 9%, and altcoins across the board have seen double-digit losses. In total, between $100 and $160 billion of value has vanished from the market. More than 400,000 traders have been liquidated in a single day, and forced selling has created a chain reaction of panic. Market cap numbers are changing day by day, but the bottom line is the same. It's one of the biggest single-week corrections of the year. However, crashes like these are nothing new. In fact, the past has taught us that crypto virtually feeds on these violent shakeouts. Late last December of 2017, Bitcoin had just hit its then all-time high of almost $20,000. There was euphoria all around, but within weeks the price had fallen by over 60%, initiating the so-called crypto winter of 2018. Billions were lost, projects fell apart, and numerous investors vowed never to set eyes on digital assets again. But who made it through that time and remained in their seats eventually saw Bitcoin recover not only to 20,000 once more, but much higher, indicating that severe crashes do not have to be terminal. The March 2020 crash is another apt analogy, when the worldwide pandemic caused shockwaves in all financial markets. Bitcoin declined by almost half over a period of days, going below $4,000. It was a savage reminder that crypto is an extension of global macro conditions and not separate from wider financial panic. Then too, trillions were lost, leverage positions were lost, and fear ruled the narrative. But within a few months, the bounce back started. By year-end, Bitcoin had spiked to new all-time highs, before going on to breach $60,000. That collapse turned out, in retrospect, to be one of the best crypto buying opportunities ever. We also can't forget about May 2021, a moment seared into the memory of all crypto traders. Following a powerful bull run that had pushed Bitcoin beyond $60,000 for the first time, a sudden chain of events initiated an enormous correction. China imposed limitations on mining, Tesla halted Bitcoin payments, and billions of leveraged positions were closed. In a few weeks, the market lost over $1 trillion. Then it seemed to be the end of the party. Twitter was congested with hopelessness. Analysts foretold extended misery, and numerous retail investors left for good. And yet, mere months after, Bitcoin burst ahead again, to an all-time high in November of the same year. Such is history, and it brings this day's crash into perspective. $125 billion is, yes, a mind-boggling sum, but relative to the scale of crypto, it is simply part of the process of expansion and contraction that marks the currency. Each cycle has larger figures because the market as a whole has grown. A decade ago, to lose $1 billion was doomsday. Now the market can lose more than $100 billion and still be basically unscathed. That increase in magnitude is testament to how far crypto has traveled, but also a reminder that volatility is still hardwired into its genetic code. What makes this crash stand out so much is the magnitude of liquidations. Over 400,000 traders dislodged from their positions in one day illustrates just how stretched out the market had become. Leverage can power rallies, but it also amplifies the agony on the downside. Computer-aided liquidations introduce selling pressure far beyond that which individual investors could possibly create. And this is precisely the reason why corrections have a tendency to spin completely out of control. It isn't mere people panicking. It is computers unloading billions of assets on the market simultaneously. Macroeconomic stress is another essential element today, as in previous crashes. In 2020, it was the pandemic. In 2021, it was Chinese regulatory news. Today, it is the Federal Reserve and world monetary policy. Higher interest rates and a strong dollar reduce risky investments such as crypto to less desirability. It was institutions that initially invested fortunes of money in Bitcoin as a hedge, who now offset those bets against more secure returns in legacy markets. That tug between global economics and speculative demand has ever driven crypto, and still does today. The human element to the tale is no less significant. Each crash weans out those who bought in unprepared. Hypers who invested everything they had, who invested funds they could not afford to lose, who leveraged to pyramid their profits, usually get wiped out. It has happened time and again in each cycle. But those who come in with a plan, who spread their holdings, who embrace volatility as a means to an end, are the ones most likely to make it and even prosper in the long term. In Bitcoin's case, now attention is on if support is going to hold. The $111,000 band is being monitored closely by the analysts. If the buyers hold that level, it might presage a rebound. If it fails, the next support is closer to $105,000, and beyond that, the decline could deepen significantly. Ethereum, too, is at a fragile point, hovering near $3,200. A breakdown there could spell more trouble for altcoins already on shaky ground. What should investors do in times like this? The lessons of history are clear. Do not panic sell at the bottom. Don't over-leverage yourself, always be in control of risk. And most importantly, take a broader perspective. Each crypto crash in history has been an end-of-the-world situation while it's occurring, and each crash has ultimately been followed with a next cycle of growth. This doesn't imply that the recovery will come fast or be painless. It signifies that volatility is natural, and survival is based on patience, discipline, and attitude. So today, while we observe news headlines announcing billions lost, we must recall that this is not the first bust, and this will not be the last. In 2018, in 2020, in 2021, and again in 2025, the script is repeated. Peaks and valleys, highs and lows, hope and despair, fear and greed. It isn't if the market will recover, but if you are ready to ride out the slide until it does. As this tale unfolds, one thing rings true above all others. Crypto is not for the faint of heart. It strains the faithful, it penalizes the careless, and it repays the long-suffering. The $125 billion erased this week is a headline getter. But to long-term believers, it is just another chapter in a much grander narrative. And that narrative is still unfolding. The question now is how you prefer to play your role in it.